Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. Just looking at a few trades that we were looking at over the weekend. So we were talking about Aussie US dollar. So we were looking at this as a double bottom. So we have this low and we have this low here. So we're looking at this as a place where we potentially are going to see a rejection. So we have a bounce there, and then we have a bounce here. So we're looking at our entry was above that green bar, the first green bar, and our stop loss was a little bit below it. So we gave a little bit of room below. So we got triggered in, and then we're now at this present moment, we're down a fraction on it. Now, again, this is a reversal pattern. This is counter trend. So this is not a high probability trade. US dollar is getting stronger. Okay, so US dollar has been getting stronger for the last 18 months. So is this a trade I expect to win? Probably not. But for those of you who trade reversals, there is a trade there. Ideally, how we should have taken that as down onto the smaller time frame and looked to enter about there. So that's ideally where we should have gone in at. But there was a trade there on the daily chart, and it is something that's after setting up, but it's not something that was massively jumping at me. It's not something that I would have taken, but I know for some of you guys you have and will have taken that. Just to have a quick look at the dollar index, let's see how it's gone over the last couple of days. So the dollar index came back and had a double bottom here and had a huge day. And then since there, it is moved sideways. So ideally, I'd like it to come back to here, this trend line, and then we'd have a triple bottom, and then we'll be looking for it to pop up again. But we are sort of in this area where we don't know whether it's going to continue strength to there or whether we're going to have a pullback into this area. So it's just something to keep an eye on. And then with that in mind, we have to look at silver and gold. We look at silver. Silver has come back into that very sort of weak trend line. I've put that in there. Is it a high probability trade? No, not really. There was a short there, short position, entry there, stop loss above it. And then it was a question of where our stop loss should be. Should our stop loss be there? Should it be behind the horizontal? Should it be behind that, or should it be just above the high? And for me, none of those are great areas for us to be looking. If you have two choices: either take profit inside the open and the close here, or inside that red horizontal. But again, it wouldn't be a high probability trade for me. It's not something that's jumping out. We are in that sort of no man's land with the likes of US dollar. So for me, stay away from it. Gold is very similar. We talked about this being a reversal back to that trend line, and that trade is still valid. If I just move this out of the way, I'll move that out of the way so you guys can see it. So this is more of a 4-hour trend rather than a daily trend. But we did take that low test bar there. So the green one, so the stop loss is at the bottom there, entry is above it, and we're looking for this reversal back. And again, if we're thinking or expecting to hit this trend line, this is not a trade we should be taking because the risk to reward is not there. So just make sure you understand that the risk parameters have to be there for us to take this trade. But if we're looking for this to go back, it is definitely not something that I'm looking to take at the moment. So the Nasdaq has now made a lower low. Anyone who jumped in the trade last week, so we jumped in here. Anyone who jumped into this trade here would have made about a 1% on that. So well done, anyone who took that. I know we were looking for a 3-to-1, but we very, very quickly moved our stop losses underneath. And then look, we had a phenomenal on the back of the inflation news. We had a phenomenal reaction. We've now had a lower low. So for me, this trend is now down. Okay, the trend is now down. It's changed direction. So we have our phase 1, phase 2, phase 1. I'm looking for that to hit here. And if it pops up and hits this area, I'm then looking for this to come back down to here. Okay, I will not be in this till it makes a higher high and retests. So at this moment, I am now out of the market here for a long, but if it hits its head here, gives me a nice price action, I will be looking at this as a short. Okay, if it gives me likes of this, phase 1, phase 2, it gives me that nice bar there, I will be looking to short this market. Now, again, how far down, I don't know, but I expect it to get somewhere in around the 11184 level, somewhere in around there, ideally back to this floor here. And then at this particular point, I would expect some sort of rejection to the upside. S&P is identical, so we need some sort of pullback, and for me, probably back to the trend line rather than the horizontal. So similarly here, need some sort of pullback. Now, this may happen today, tomorrow, or it may continue going down. But ideally, I'd like it to come back into sort of this area. The Dow. Now, the Dow was a little better set up than the S&P because the S&P didn't set up properly. And it was a better setup than the likes of the Nasdaq. Again, it's in sort of that no man's land. Whereas if we look at the Dow is sitting on that level. So 1, 2, 3, 4. There's actually 4 touches on this floor here. Now, unfortunately, if you took a trade on that long, on the first bar there, I'm pretty sure you would have been getting triggered in and then also triggered out at that particular point. If I zoom in on this, so see this bar here, entry above it, stop loss below it. I'm pretty sure you'd have been triggered in, triggered out, and then it finished back up there if you'd have taken that. But I'll just drop down to the 4-hour and have a quick look. You wouldn't have been, look, absolutely, you wouldn't have been. It dropped down and then it went back up. Okay, so you would have got away with it if you'd have dropped down to if you'd have taken that. So it dropped first and then went up. I'm assuming from where the 4-hour finished here. So see the open and the close here. I'm assuming it went up a little bit, then down and went up, but it didn't. It opened here and then just dropped and then went back up. So you actually would have been triggered in on the way up. So you wouldn't have been stopped out at this particular point because our stop loss would have been there somewhere below that horizontal. So you would have got away with it. But again, is this a high probability trade? No. Somewhere around there to take profit. It's only a 1-to-1 trade, so it's not something that's massively high profile. There's not anything that's massively high beneficial for us, so it's not something that I would be looking to take. German DAX, it had a buying day. It had this double bottom, had a buying day, but I fully expect it to come back down into this area, this triple bottom, before I would be looking at that in any way, shape, or form to come down here. And then would potentially look at it as a buy, or if it breaks and retest, then we'd look at it as a short. But there's nothing massively here jumping out. French CAC, just stay away from it. It gaps too much. UK 100. I know we talked about this particular trade here in the UK 100. stop loss below, entry here. It was a huge bar to be trading. We are sort of sitting on this floor here, and as you can see, we've already had a rejection today, so it's popped back up, hit the ceiling, and then come back down. So I'll just move this out of the way so we can actually see what's after happening. So today's bar, look, opens here, went up, and it is now down here. So it looks like there's more sellers in the market than buyers at the minute. But if you look at that, buyers did try to push it up. So there is an argument going on between the buyers and the sellers at the moment. So make sure if you're getting in at the correct points. China, I fully expect China to come back the whole way down here. I don't see any reason for that not to come back down to here. So it's just for me, it's just a waiting game. If you're sitting in this trade, just hang tight and just let it run. I know if you are on eToro, doesn't this have an expiry on it? If I'm not mistaken, the China 50 has an expiry. So just be aware of that. Aussie 200. So this is something that I looked at, and I was looking at it to potentially take as a long, but because all the other markets are down, I decided against it. Also, we've had a lower low here, which signifies that there's more pressure to the downside. But we have that horizontal, and the open and the close is above it. So theoretically, it has bounced off this level, but there is a potential bounce there, and I decided against this particular entry, but there is a potential trade there. But then if you look at the other side of it, the lows have got lower, the highs have got lower. So theoretically, the only place that's going is down at this present moment in time. But again, let's see. Is it a high probability trade to buy it? Nope. Can we short it? No, because we've only got 2 bars. We want to have one more bar sort of pop up and hit this ceiling here, and that would be a point where we could then short the market here. US oil, or WTI crude, is whichever one you want to call it. It's, for me at the moment, stay away from it. Stay away from it. It's just too hard to judge. The overall momentum is going down, so every time it hits a high here, just short it. But the problem is that the entry is not very good. It's not respected at any sort of levels. If you have a look at this, it's very sideways. So for me, it's one of those ones that we were looking at, we stayed away from. We had lovely momentum here. We got loads of money out of it as it went again. At this present moment in time, nope. We had a few nice shorts on this. We had a nice few longs on this as well. But at the moment, sort of stay away from it. Go on to the next one. So natural gas. Well, natural gas has a double or a triple bottom, 1, 2, 3 here. It's bounced off that floor, 1, 2, 3, and this is the 4th time. We do have this little sort of wick on the bottom of this, indicating that there's more buyers in the market than sellers. We have our entry here. We haven't been triggered in as of yet, and that is an order that I have placed there. So that's something that we need to keep an eye on. So we looked to short the market here, but we never got triggered in. So anyone who took that trade, unlucky. We had a trigger here for short. Our stop loss was above that. It never got triggered in. Our take profit was just inside this low. And what was it, a 1.8 to 1. Unfortunately, we never got triggered in. So you win some, you lose some. Now at the other point of the channel, so this is sort of a channel going on now. We have an entry here, stop loss below it, and we're looking for this to pop to the upside. Now just be aware that oil is dropping, which natural gas you would expect to drop, but again, it doesn't necessarily mean that it will. doesn't necessarily mean that I will. So ideally, we'd like to see that pop and hit this ceiling here, and then we can short it again. I know I haven't done this in a little while, so let's have a quick look at crypto. Let's have a look at BTC. So anyone who's been trading crypto over the last couple of months, you've been crying your eyes out. So we got back down to that level, the 18,000, and we had a little rejection on it. But again, I don't see any reason for this to pop to the upside. I fully expect this to break to the downside. So anyone who is outside of the UK and can short this, I fully expect this to break out to the downside till it gets to a level where everyone is happy to start investing in this again. What generally happens is, if we have a look at this here, we have sort of this channel. And we get this breakout. Look how strong this breakout is. We have sort of this channel sort of movement that keeps hitting this floor. And I expect a pretty violent breakout to the downside again. How far down is the question. That's the big question. We have a couple of levels down here. So the previous high, which was about 90, or was that 13.8? And then that one there seems to be a pretty decent level at 12,300. But there are a few nice areas down underneath that where we had actually real rejections off of. So keep an eye out and keep your trading head on a swivel. The markets are moving very, very quickly. They're not massively trending, which means that if we get into a trade, we're trailing our stop loss, we're pivoting, we're managing our take profits, so on and so forth. So this is the time where we can potentially take a cheeky trade here and there and get a 1%, maybe 2% out of it. Make sure you're trailing our stop loss, moving the break even, par closing your trade, so on and so forth. But other than that, make sure you are trading high probability trades, and hopefully you get a little bit of luck as well on top of that. Hope you all have a lovely day. Speak to you later. Bye-bye.